During the active quarantine phase, 800,000 new brokerage accounts got opened. That the Fed cannot always push the stock price up with the help of the printing machine. But for the average investor today, there is no other alternative for investing except for the stock market. Glad to welcome you to the CoinPost channel. Over the past month, I've said several times that there is real disconnect between the stock market and the real economy, and its growth is difficult to explain in terms of investors' usual behavior. Yes, there is the money printing machine factor, but is it that powerful? Therefore, today I decided to discuss with you one interesting article that outlines the possible reasons for the growth of US stocks in the current crisis. The primary source of these reasons is a scientist, economist, writer, and the 2013 Nobel Prize winning economist Robert Schiller. You may not agree with the Nobel Prize winner's opinion, but at least you need to know it and take it into account. He must have got the award for a reason. In total, Robert Schiller gives 6 reasons for the growth of the stock market, and we're going to briefly analyze each of them, leaving the most important stuff for the final part. Join our community, check if you're subscribed to the channel, and turn on the notifications. Let's start. You'll be surprised, but the first reason for the growth of the stock market is that Americans are super bored. You don't need to go to work, sports are cancelled, bars and restaurants are closed, the shopping malls don't work, and even your favorite casino is in no hurry to welcome you, suffering thing. What to do then, especially when you consider that the government is giving money, and you actually have it? According to Bloomberg, during the active quarantine phase, 800,000 new brokerage accounts got opened. That is, new people entered the market, and according to Warren Buffett, they started buying for the long term without thinking about the current value of the shares. Commenting on this theory, Schiller said that people want to do something. I'm convinced that the protests in the United States were much more massive because of boredom than if everyone was working. I'm talking about this in detail and giving the possible consequences in a separate video. You can find the link in the description box. And we're moving on to the second reason. The stock market crash is associated with panic due to the coronavirus, and more precisely, with the economy shut down. But the first shock passed, investors assessed the situation and concluded there is no threat to the American corporations. Indeed, the drive of stock market growth has been FAANG stocks, such as Facebook, Amazon, Apple, Netflix, and Google. These corporations represent about 20% of the value of the S&P 500. And only after the index price went about 3,000 points, investors began to buy shares of other companies more actively. Obviously, these companies don't have an alternative in the global arena. Each of them has a decent cash supply, and their services during quarantine are getting even more popular. Besides, the government also helps large businesses. It's the cafes, bars, and private shops that are shutting down everywhere, but large companies are making out pretty well, and as a result, their stocks seem attractive to buy. The all-powerful US Federal Reserve and its magical money printing machine can do miracles, especially if the Americans believe in it. If you closely monitor market fluctuations, you'll see that, immediately after the collapse, the Fed switched to emergency measures to save the situation. And this has paid off. People believed that the authorities would stop the crisis and started rebuying stocks. And far more interesting is that about 10 days ago, the Fed made a statement on the US economy, and we got the S&P 500 correction by 240 points. But then Jerome Powell, the head of the department, made a public statement and promised that the market would not be left without support, and prices would go up again. Our expert Robert Schiller believes that the Fed cannot always push the stock price up with the help of the printing machine, but its mere presence on the market and support statements are a strong factor for investors in making purchasing decisions. The fear of missing out, aka FOMO, is familiar to many who are not new to the cryptocurrency market or deal with the stock market. Everyone who has discovered the investment world is afraid to miss their chance. They fear not to buy and thereby lose some potential profit. And although the current economic situation suggests the opposite, the market is overheated, the economy is in deplorable state, and even Warren Buffett doesn't buy anything but only sells. But screw the reasoning when you're at risk of not buying today, being left behind, and tomorrow buying at even higher price. FOMO is a convincing argument, and our Nobel Prize winner agrees with that. Moreover, investors just have no choice, so they are conditioned to buy shares. I'll talk about this later, but first, I'll say to you, dear viewer, you're halfway through the video. If you find it interesting and useful, support the channel by giving your thumbs up and sharing the video link with your friends. So what else to buy if not stocks? Here I should be a knight riding a white horse, coming from behind the scenes and talking about Bitcoin and the cryptocurrency market in general. But I won't do it today, because there are plenty of such videos on the channel. But if you put yourself in the place of an ordinary investor, then they practically have no alternative but to buy the stocks. After all, depositing money doesn't make sense because of a zero rate. Now, for deposits in dollars or euros, you need to pay extra. You can't invest free cash in bonds either, because due to the same low rates and activity of the Federal Reserve in the debt market, its yield is minimal. So it turns out that the only option for those who want to buy and earn is shares. Of course, there's still a foreign exchange market, derivatives, leverage trading, and other opportunities. But for the average investor today, there is no other alternative for investing except for the stock market. It's also essential to consider that the global economy has slowed down significantly in recent years, and current events have pushed it into recession even more. As a result, we have zero and negative interest rates, but the amount of new money, on the contrary, has grown significantly. People have a crap load of it, and you gotta put these somewhere. They also say the markets are efficient, and this is the last reason for today. I'm moving on to it right now, but let me remind you to subscribe to the channel. I'll make some new content for you. The effective market theory has captivated people because every investor is a part of a super machine and super mind for information and events processing, and it reflects them in the price of an asset through its actions. This theory has common ideological prerequisites with technical analysis, according to which all events are already included in the price, and therefore you can only predict the market by looking at the chart. This is why this chart didn't indicate the approaching coronavirus. They don't explain this in the theory of technical analysis. It just happened. According to the effective market theory, the current growth is explained by the fact that many investors simultaneously assessed the pandemic's consequences. They thought the pandemics wouldn't be that bad, and that the recovery was going to be really good, and began to reinvest, expecting growth. Robert Schiller is famously critical of this theory, and believes we're the creatures with all sorts of quirks and are extremely easy to manipulate. This can be explained by what's happening now. For example, a politician says it's necessary to lift the quarantine measures and reopen. However, the epidemiologist is skeptical, saying that lifting the measures could now lead to new outbreaks, and then the pandemic consequences could get even worse. Perhaps most people are going to listen to the politician's arguments, because those are better storytellers. Besides, the politician offers us a happy ending. When the quarantine ends, everyone will get back to work again, banks will keep giving loans, shops will sell, and life will be the same as before, if not better. In turn, the doctor scares you with the second wave of the pandemic, the need to wear masks until they invent a vaccine, and we don't know if a new more contagious disease won't emerge. Obviously, in this situation, the majority are going to listen to the one who promises a happy ending. Specifically in this case, it's the fact that the crisis came to an end, and then the stock market could go straight up again for the next 5 or 10 years. Robert Schiller concludes that most of the actions on the market are influenced by someone else, and these are often irrational decisions. So in fact, the market is not effective, and sooner or later, mass misconceptions are going to lead to a global catastrophe. Share in the comments which of the reasons I gave in this video have the most significant impact on the market. And that's all for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.